Welcome to Beyond the Expert, a production of AGORACOM in which we speak with small cap market investors and experts about what they're seeing in the markets. Today, we're welcoming back venture capitalist Leigh Hughes. Whereas Beyond the Press Release tells stories from the side of small cap public companies, Beyond the Expert tells these stories from the perspective of experts on these topics. And given his great and incredible track record, we couldn't think of anyone better to start off 2022's Beyond the Experts than Leigh Hughes. He's a venture capitalist who I've personally watched conduct incredible due diligence to discover, invest into small cap companies at very, very early stages before everybody else that have generated some incredible returns within 12 to 18 months. Leigh is so good that what he does that many global private equity funds and institutions take his call and often follow him into investments that he chooses to make. And moreover, he serves as an advisor to several small cap public companies. So if you ever want to truly learn about how to become a great small cap investor, it doesn't get much better than this. Leigh, welcome back, my friend.
Thanks, George. Thanks for having me on.
Hey, today is our first Beyond the Expert 2022, and we're talking tech. Two things we want to talk about is video commerce, live video commerce, which most people on this call who are going to watch it can say, I don't even know what that is. And then we're going to go a little more traditional into the world of esports and what's happening there, because the ground has been shaking a little bit over there. So I think it's a worthwhile discussion. But first, let's talk about video commerce, and specifically OOOO Entertainment that trades on the venture and the stock symbol OOOO. Here's what I want people to know just to get your attention. What is it? In October 21, an online personality in China called Lipstick Brother sold $1.7 billion of beauty products, not for the year, not for the quarter, not for the month, not for the day, in a 12-hour live show. All right. So that should have your attention. It's an online shopping experience that feels like a combination of Home Shopping Network, a game show, and a talk show, and it's taken China by storm. And now OOOO is bringing it to the rest of the world. Let's talk about OOOO. Leigh, what are your thoughts on live video commerce first, and what are you thinking in terms of OOOO itself?
Well, I mean, you think of live commerce, all you need to think of is the word disruption. It's very, very disruptive phrase in all aspects, and I think you just hit the nail on the head. Actually, it's an influencer disrupting what we're doing and telling us to buy potentially something, and we go and buy it. We engage with the influencer, we engage with the client, we engage with the brand, we engage with a social community that's also just maybe bought the product for a reward or a coupon to then go and share it. I mean, you really, we're going down this rabbit hole that we haven't experienced yet when it comes to, I guess, a shopping experience like no other. I mean, I like to sort of call it, social commerce and how it's impacting our shopping experience. I think that's probably something that people relate to, because when you think of social, you think of social media. Obviously, social media is a very popular route for catching our attention now when it comes to moving us into the online shopping world. And then, of course, social media for a company like OOOO acts as just a huge lead generator for its retailers and its websites that it's capturing, like Ann Summers and others that obviously this lipstick experience example.
Lipstick Brother. They're all tongue twisters in their own way. But, if we think about social commerce and how it impacted our shopping experiences last year, I think just in the VC, private equity, call it what you will, space, I think there was over $7 billion raised last year just for startups that are wanting to impact this live commerce category. And why not? You mentioned China. I think it's really interesting for people to understand just the enormity here. There was $180 billion spent in video commerce, live video commerce last year in China. Actually, I think it was 300 billion.
Okay,
If I'm right, I could be right. I thought it was 300, but either way, it's a massive number.
Yeah, and I think they're talking about that number being, possibly, 400 to 500 plus $billion this year, just in China. You mentioned Lipstick Brothers. I'm going to get this name right by the end of this session with you, but China has huge fintech players, like we know. Pinduoduo is a huge fintech player in China. I think they're $100 billion valuation plus. They're really early stage in this live commerce disruptive category, and their numbers have just skyrocketed since capturing the attention of this category in China. And I'm talking numbers like we haven't seen before. So yeah, I guess we're seeing now a little bit of an adoption outside of China. OOOO is one of those. I think, George, correct me if I'm wrong, I know that they're multi-jurisdictional. They're certainly looking at markets like Italy,
UK,
Brazil.
There's Italy. There's South Africa, I think. So I'll get to that in a second. But yeah, they're and Brazil. So they're moving pretty fast.
Yeah, and again, we can probably thank the pandemic for this disruptive tech finding a home, as big of a home as it has in such a fast period of time. I think the pandemic, I looked at a stat the other day, the pandemic has increased e-commerce sales from, it'll increase from, I think, 15% to 27% or 28% or something like that in the next 4 or 5 years. And that number is massive. Look at a third of our shopping experiences all taking place online. I mean, that's massive. So we're now seeing technology that are being implemented across multiple channels to influence us to capture as much of that 30% they can.
What I find really, really cool is the fact that we're seeing this next evolution in e-commerce. And a lot of people at home might be thinking, oh, that sounds too hokey, right? This. Well, remember how people thought about e-commerce when in Web 1.0, right? Which was everyone put up a store or something like that. And then how it evolved in Web 2.0, where you could see the products better, 3D, all that. Now we're just going that next level of immersion. And, massive companies are born out of these paradigm shifts. Like Shopify is a classic example, right? I'm not saying that OOOO is going to become a Shopify. I can't say that, but they are at the cutting edge of this. What I like about it is they're taking it from China. They're not trying to compete in China where it's already mature, and they're moving it to the rest of the world. And the co-founder, Sam Jones, right? He's got an incredible, if I'm not mistaken, an incredible background, and you know him better than I do, Leigh, in really delivering great new cutting edge technology that commercializes. Tell us a little bit about.
I mean, again, in Australia, we like to use acronyms that relate to sport, but you're backing the jockey for sure when it comes to OOOO in its early stage, and Sam's certainly a winning jockey. I think you've obviously got OOOO set up on your platform. You'll be able to engage with him, I think, soon, and also see his background.
Oh, we already have. No, we already have.
Okay, it's exceptional. From when you're looking at startups and you're looking at tech and the delivery of tech and the execution of the tech and the testing of the tech, Sam's been there, done that. He's extremely bullish. In fact, he's come out, and I don't know whether I like this or I don't like this, but
that's pretty upfront. I like that.
Kind of sit in the middle, but he's come out and called it $1 billion valuation in 24 months. Now, it's a $50 million valuation today, so that's a 20x. I think, I take my hat off to him this early, making a statement, a very bold statement like that. And of course, they're going to have to be exceptionally aggressive. But I think what his plan is, is to bring on all the partners. The tech's been tested, the tech works, the tech's making money. Now it's all about bringing as many content creators to take place in the platform, which obviously are the influencers and whatnot. Obviously the engagement of the brands through these huge online shopping centers, I call them, like Ann Sumner's and I think JD Sports. And I mean, these brands are massive. And
they're always afraid of being disintermediated, right? They're always afraid of, hey, we better be at the cutting edge. And I think that's what OOOO does. Because
yeah,
gone from going to the store to going online just to browse to going into a live feed. And there's a guy named George who's selling widgets live all day long. They're interacting. It's fun. They've been entertaining, right?
Yeah.
And that's what OOOO through Sam is bringing to the world. And they've got down to a science. They've got the studio, the set design, it's broadcast technology.
Crazy. Yeah.
Even the live hosts, they're even training live hosts. So let's say I suck at presenting. I'm great at producing and selling widgets, but I suck as an online personality, which a lot of people say. OOOO will provide even the live hosts, right? So he's really got to figure it out.
Yeah, he does. And, obviously this word immersive has, it come to the forefront recently, obviously with the crypto world and this, metaverse world. Essentially it's immersive content for a virtual shopping experience. That's what they're doing. They're doing everything, it's picks and shovels. It's midstream, upstream and downstream. They've got the whole thing captured. So, like any fintech business, it really does come down to, once you've got that right and you start obviously building out the platform, it just becomes about numbers, it becomes about transactions. And
it becomes about execution, because they signed QVC Italy, QVC Italia, right? So that to me, Leigh, you tell me what you think, but I always look for third-party validation. So there's no doubt that OOOO thinks they've got a great business model. There's no doubt that Sam is a great evangelist, the company's with, but at some point we have to, a company has to deliver third-party validation, which comes through sales, partnership. Well, here you're talking about QVC Italy has teamed up with OOOO to do this. So what did you think of that win? And what does that tell you now about where OOOO may be going forward? Does that eliminate or mitigate a lot of the risk?
Don't know too much about QVC Italy, but I guess once you Google them and you go down and have a look at how big of a business that is, I mean, of course, that's validation. I think you've got another
25 million homes for Italy. That's massive.
It's a lot. They've got an agreement with TikTok, and we've seen TikTok just explode. I mean, I still don't understand TikTok, but looking at being able to integrate in-application purchasing via TikTok with its influencers through OOOO. I mean, TikTok's huge. I couldn't tell you how many transactions and how many users they have, but we all know it's just huge. So yeah, validation there. You got to look at these businesses. Walmart did its very first live shopping experience last year, and it was a huge success. Huge. You think about the size of Walmart. They are for sure going to be doing more of these special, one-off live shopping experience. Again, we go back to the Lipstick Brothers example. So, you talk about third-party validation. Look who's getting involved in the marketplace. Look who's capturing different revenue share or different revenue opportunities by getting involved in it. And you're right, Walmart, QVC Italy, like I said, I think other brand names like JD.com, Ann Sumner's, and others. I mean, these brands are big.
Yeah, and for small cap investors, there's no other exposure to live video commerce. I don't know if you've run across anybody else in the space that's this specifically targeted. So, do you have any kind of targets? Maybe not necessarily price targets, but what are your views on OOOO? Because look, you're independent. That's why we got you on here, Beyond the Expert. You're the venture capitalist. Where do you see the company 18 months from now, even at 12 months? So here we are, February 2022. Let's talk about December 2023. Where do you see them in the live, in terms of live video commerce space?
I see them certainly capturing market share for sure. They've got some big backers. He's got this, don't quote me his name. Is it Teddy Sagi? I don't even know if I'm saying it correct, but anyway, he's a multi-billionaire out of Europe, who's involved in the tech and also helping OOOO engage with different jurisdictions, brands, content creators, etc. If you're asking me what I think the business is going to look like in 18 months, to me, I like most fintech providers, I like to obviously see that their tech is advanced enough or disruptive enough to be able to also then, find a home when it comes to revenue and volume of transactions. So OOOO aren't really there yet. I think they're doing transactions and they're increasing volume, but they're not quite calibrated enough where it's just the flow is there. I still think that they're probably a quarter away from that being the case.
But they're moving quick. They're definitely moving fast.
Like very, very fast. And then I think it would be very interesting to see then what Sam brings out when it comes to forward guidance. Because I think once they've got a full quarter of numbers, they can then start to put out forward guidance, and like all tech providers, that gives people a little bit of a foundation to see where it could go with real numbers and the company putting a stamp on it. That's a quarter away for me. I would like to think that the business, as it stands right now, being a 50 or 60 million market cap, I would like to think that as numbers start to mature, I think that in 18 months' time, if after speaking with Sam and you're looking at some of his aggressive numbers and where he sees the business going, you would like to think that it's, at least, 4 or 5x from here in 18 months' time.
And they're off to a good start in the UK also. I don't know if you know this, but in our last interview, he mentioned the fact that there are 300,000 downloads of the app in the UK. So I think that's off to a great start, considering they haven't even, like you said, they haven't even gotten to into the full flow of it yet. Yeah.
Okay. Well, that's great. If you're in the UK, you would understand it a lot more. Or sorry, if you're in Europe, you would understand a lot more, because names like Ann Summers, I saw it first, look fantastic, misguided. These are all huge online shopping environments for 12-year-olds all the way up to, us who like sport and we want to buy something from, say, JD Sport. So if you're in Europe, all of these brands, and you would be very excited actually to be able to experience a curated experience while shopping in your favorite store, listening to your favorite influencer, buying something, being able to ask him questions while you're buying it, him answering it in front of a live audience, and then getting a reward coupon for buying that and sharing it with your friends, and then actually being able to get rewards for other purchasing environments or purchasing experience, and then sharing it, and then being able to comment and talk to others all around the world that have literally been listening to the live show as you and maybe made the same purchase. I mean, that's a very unique shopping experience.
It's got me, I'll end it off with this and we'll move on to esports. It's got me so intrigued, I might even say so excited, that you and I should team up and live and figure out what we can sell live to people around the world. We probably won't do very well, but man, it just makes me want to be a part of it. At least to say I did one live video commerce initiative, right? Because
it's funny. I think funny, George. When you're in London next, you can, like, I think Sam, if he hasn't offered it to you, he's offered it to me. You can go down to the I think it's 20,000 square foot studio,
30,000 square foot.
30,000 square foot in London, and be a broadcaster for a day, or be a seller for a day, or be an influencer for a day. I know that when I'm there, I'll be going and having a look. That's for sure.
Well, I'll make sure we're there together when all this nonsense is, all this travel nonsense seems to be coming to an end, and we'll do that together. So that's awesome. Talked about OOOO. That's amazing. And we'll revisit them in 6 months on another one of our shows. Just see.
Yeah, and just as a disclaimer before you go on too, I'd just like to make people aware too that I invested in their pre-IPO round, call it a year ago. Just so people understand where
you're way ahead of everybody. It's amazing that you did that.
Well, way ahead of everybody, but the market taking a little bit of a hit, positions down at the moment. But when it's like every great stock, it has its periods of of downward dips, as they call it here in Canada, and they have their moments in to shine too. So watching from afar and a really interested and engaged investor.
Hey, and before we actually hop on to esports now, maybe we fill that gap just a touch with something you just touched on, which is the small cap market has taken a hit in the last 6 months. It's almost like it got ahead of, because we saw now we've seen the NASDAQ take its hit. So it's almost like the small cap market somehow, I don't know if it's anticipating it or coincidence, but it's definitely taken a hit. And there are a lot of people out there concerned about it. Look, I've been this for 25 years. I've seen some massive highs and then some big dips. So there's a cycle to all this. Risk on, risk off is the technical term you and I would use. What do you make of what happened to small cap markets in the last 6 months? What do you think happens to small cap in 2022?
Look, I certainly do look at the cycles, the yearly cycles. For me, I pretty much don't really do too much from the middle of December to the middle of January. It's festive time. People are not really engaged at their desks. They're waiting for the middle of the winter doldrums here, or the summer doldrums in the summer in the south, to really be done with. I'm glad that the softening happened now and not in late February or late March, when statistically we see that in the past years companies are marketing themselves and really trying to engage with shareholders and investors and increase their valuation and show off their performance. I like the wash up. George, when you start seeing and hearing about kids or unsophisticated shareholders or investors buying JPEGs in August for $40 and selling them in December for $400,000, you got to start to think that the market is not really acting consistently, as with any element of consistency and with any element of fundamental, based on any fundamentals. And I think the wash up was a good one. I don't think it's done. I still think that it's going to be. This is just my personal opinion. I think it's.
Of course, that's why we got you on.
I still think it's got a little bit of room to go, but it's also done it in a pretty kind way as well. Think about March 2 years ago. It was not kind. That was a slap in the face, and we didn't have that in January. We didn't have a slap in the face. We just had, I think we had a little semi-correction. I follow a guy online called Brian Feroldi. Okay, he's really, really smart. He's a seasoned veteran VC guy out of the US. He has a great podcast. He has a great Substack, and I follow him every single day. He's sending infographics or just real clever commentary about how he sees things going. And he sent one this morning that was, and I've got it open on my computer while I'm talking to you, and it says, every great stock will have long periods of underperformance. Patience.
That's how Warren Buffett amassed the biggest portfolio wealth in the world, right? Because he wasn't buying stuff he was buying stuff early when it was undervalued. So and he is actually okay.
Yeah, and he then goes on to say that patience is not a nice to have; it's a requirement. So and he shows charts and whatnot, and he shows great ones with Apple and Amazon and how they all used to look, and most of the FANG stocks and whatever. And we see that in a lot of great investments, and it's a very hard thing to say, oh yeah, but you could have bought Amazon in or Google in 1990, and of course you'd be sitting on a small fortune now. But who's going to wait 30 years? And I guess that's not where I'm going with this. I think where I'm going with it is we just got to understand that there are cyclical events that happen in the year that we need to pay attention to, and we need to plan around those cyclical events. And for me, I typically plan that December and January is going to be how it is. And I typically don't necessarily look at my stocks every day. I'm certainly watching.
Either do I. I just want to know that they're intact as a business. I'm
certainly watching to see. Yeah, I'm certainly watching to see how the companies are performing, if they're releasing anything or they're pushing anything out, of course. But like I said, I don't want to sit on it too much. I just think that January was a good thing. it is not good when you look at your portfolio and you see your portfolio's down points. But I think in the broader scheme, or if you look at it from a macro view, I think for the overall sentiment of the market, I think a little bit of a wash was what we needed.
And on that note, esports has definitely gone through a bit of a wash. Last 6 months, DraftKings down 55%, Penn down 33%, Esports Entertainment Group down 66%, and Fans Unite down 38%. And I bring up those names because they're part of a Roth presentation that took place recently. Yeah. How do you feel about esports today? Now with all this, are you just as bullish on the space, or
I am. No, I am. And you know what? One of the things that I've certainly taken from the esports category or online gambling category, call it what you will, or the blend of both, is that when you talk about Penn and DraftKings and is Penn your DraftKings and all of these big names that have captured a lot of attention down in the US, the thing that they can't seem to avoid, because at the end of the day, it's all about customer acquisition, is the customer acquisition cost, right? So you've got to market to win eyeballs, to win them sitting on a seat and to engage with you. And it's very, very competitive. And, you know, DraftKings are an amazing leader of the space. They've done some exceptional things. They've been pioneers when it comes to licensing and technology, and really enabling other names, small cap names, to have a go at it. But if you really do a deep dive in their numbers, you'll see that their customer acquisition cost is huge.
I think that's starting to finally catch up to them, which is why Roth has a $23 price target on them, and they're pretty much fully priced in now, $22.
Yeah. So if you start to look at some of the other names out there, obviously GMBL has, you know, I know that's a great one on your the EGLX or GMBL.
GMBL. They got beat up pretty bad, but Roth, despite the fact it's trading at $3, has just re-upped their $22 price target. So unlike DraftKings that's there, GMBL's got, you know, close to 7x, 8x, 7.5x from here.
And Roth aren't stupid. I mean, Roth, for anyone that doesn't know who Roth is, you know, Roth is an investment bank in the US. They've been consistently a leader when it comes to sub-billion market cap entities, financing them, working with them as a banker. I mean, I think it's a good 30 years of consistent wins now that they've had down there. And they really like the space. They put out great research notes, I think monthly now, or even, you know, twice a month. They've got analysts down there in the US, so they're a bank to follow. People should be certainly reading their research notes, because they really do give quite a granular breakdown of why they see the space where they see it. That, you know, they're looking, like I said, you know, if you've got a high customer acquisition cost, you better have a very high return. You know what, an ARPU, average revenue per user. You'd want to have a very, very high ARPU if you're going to have a very, very high customer acquisition cost. But if you've got a very, very high customer acquisition cost and a flat average revenue per user, then, or less, you're not making money.
You're in trouble.
So, you know, there's names out there that Roth have covered, and obviously, you know, GMBL is a good one, where they obviously see that those numbers don't add up. I mean, I think GMBL put out guidance for, and I'm not a shareholder of GMBL, but I think they put out guidance of
100 million in revenue for 2022.
Yeah.
And that's what they're basing it on, because even if you got a 4 times revenue multiple, that puts them at a $400 to $500 million, you know, market cap. So now, given what's happened in the space and given what Roth is saying in their research, are you taking positions in the esports space? And we know we can't have this conversation without also talk about Intema/React Gaming, who you're very close to. But do you almost look at this as a, I don't want to use the colloquial term gift, but do you look at it as a real opportunity, as a dip right before the esports betting and gambling and engagement space starts to take off again?
a really big opportunity. And again, my disclaimer here is, I'm an advisor to the business that was announced in February last year. And, I do own a significant position in the company. I really have spent a lot of good quality time with their team last year. The company was able to raise $15 million in 2021. And to give you an idea, the company in December of 2020 had $12,000 in the bank and was a 1.5 million market cap. Okay. It did repivot into the space, and it's executed like no other last year. Everything that they said they would do at the beginning of the year, it achieved and more. It had, periods where it was halted for a lot longer than normal. But again, when you're starting to get into,
but that was because of a major acquisition, that it had to close. And the exchange said, okay, this is so big, we want to make sure you close this and you're not trading, which made sense, I think.
I think
they
closed it, but it also took time. And they're kind of leading the race when it's come to really doing licensing properly. They got Isle of Man. That's really difficult to get. They got the Isle of Man license at the same time as closing a significant acquisition. And the exchange just wanted to make sure that the T's were crossed and the I's were dotted, just like it was in the cannabis days when it was a circus back early, and the exchanges needed to put some, get some regulation there so that everyone wasn't just making their Xbox go public because they love esports. So it took time. The reason why I like React is, again, if I go back to some fundamentals that I just spoke about, their average revenue per user is 10x what their CAC is, the customer acquisition cost. That's in numbers. That's in 5 years of audited financials with Loot.bet. The marketplace is going to see that when research notes come out, because it is a real business. It's fundamental. It's strong. It did 100+ million in betting handle last year. When that whole ecosystem comes together, which it is right now, yes, it's going to be under the name React Gaming, which got approved at the AGM in January. I think you're going to really see some exciting stuff from that company. The business right now is sitting at a 30 million market cap. Whilst in the final weeks or days of closing an acquisition that literally changes its business overnight. I mean, It goes to being EBITDA positive, revenue generating, and sitting on a handle and other fundamentals that are exceptionally high and very strong and sound. So how can you not like a business like that? To me,
I think they're really going to unveil themselves now with the name change, everything. I think they're really going to go to market strong, tell the story. Like I want to do a Beyond the Deck with them, which is, all right, new name, React Gaming. All the pieces are in place now. The acquisition has been closed, all of that. Let's tell the story so the world really knows the story, because it did go through some turbulence there, but it's all good turbulence. Wasn't bad turbulence. And then when they finally came out, when the acquisition was closed, they're able to start trading again. We're right in the middle of the esports, hit that took place.
And end of the year as well. So
but I don't worry about stuff like that, because I've always said, and I think this is for everybody listening, and I'm pretty sure you agree. People say to me, well, what do you think of the price of X today? And I said, hey, if it's down, I'm not happy about it, but I'm not worried. They say, why, George? Because the business is intact. And in the small cap world, in any startup world, as long as the business is intact, that's the only thing that drives my decision. And true or false, Leigh, people who just buy or sell based on price action would have missed out on all the growth of Tesla and Netflix. And Apple went from $700 down to $315, back in 2013. I mean, that's before the split. So you talk about, people would have missed enormous gains on stuff if they just panicked at the bottom and bought at the top, because they let price action tell them what to do, versus it's business action that should be telling them, right?
Agree. 1000%.
So, and by the way, I'd be remiss, because in that Roth note about presentation, they also talked about Fans Unite, who's also a client of AGORACOM, and their stock symbol is FANS for Fun FF in the US. But, something, I don't know if you knew about this acquisition, but on November 23rd, and I'm reading this right out of the Roth notes, they announced the acquisition of American Affiliate for $58 million. American Affiliate for the year was going to do about $13 million revenue, $6 million EBITDA, and projected this year in 2022 to do $20 million in revenue and $7 million in EBITDA. So and that's just one aspect of their business. So do you know much about fans?
I was an investor early in fans.
Okay, didn't know that.
Not an investor now. Did well early with the stock, but again, I actually hadn't done enough research on the category to begin with. I got presented it by their banking outfit and just was really engaged just because I think it's a very fun category, and then watch things play out. But I still think that I still think it's early, George. I just think it's early. There's been
way early.
I think obviously, like everything in Canada, someone incubates a category, they get it public, they lead, and then the masses come. You know, the FOMO happens whilst the MOMO is going, and you see companies go public, and then, you know, I guess the reality kicks in, and people then need to see, okay, how are we going to actually rate these businesses in this category, and where are the fundamentals, and where do they exist, and all that type of stuff. I still think that we're still seeing that right now. I still think we're going to see more companies come public in this space that might not necessarily succeed, but I still think there's probably going to be some unicorns that'll pop up that we still haven't even seen yet too.
Well,
so
there has to be, right? Because it's a brand new category. No one's really run away with it. You haven't had those two big three runaways yet. So
yeah,
sometime the next couple of years, that's my timeline. Give React, give fans, give GMBL, give them all about another couple of years in order to really mature and deliver and show us what they can deliver, right? And they're doing great on the M&A side, all three of them, that's for sure.
And you know, George, you're going to see companies like, this is how I see it being played out. You've got your big guys like DraftKings and all those guys down the US. They're all competing against each other for that golden egg at the end of the tunnel. But they're also experiencing what they're experiencing right now. And I think that, you know, we're going to very much like the cannabis space, you know, some of these big guys, the MSOs, they went and let the smaller guys work it out, get their market share, calibrate their businesses, see that their businesses are sound, you know, go through their 3 or 4 or 5 years of a life cycle, and then just get bought out. And I don't think it's going to be much different for the esports or the online gaming space too. I think that, you know, the DraftKings of the world don't have time to deal with what an intent or a React Gaming Group's doing, or what a fans is doing, or
it doesn't move the needle for them at the early stage. But look, Microsoft just bought Activision Blizzard for what, $70 billion.
Yeah, so there you go. So yeah, I think we're going to see some of the ones that make it work, and they start to become really fundamentally strong, and they start to capture institutional money and institutional shareholders and whatnot. And then I think we're going to see maybe a bit of a sugar rush for some of these bigger guys to start making swings at some of these smaller guys that have done well.
Man, as always, I love talking to you, Leigh. It's amazing the perspective you bring. We've been on here for just under 40 minutes, and we could talk for another 40 minutes easy. But let's do this again on a regular schedule every 2 to 3 weeks. Keep talking about new categories that investors are interested in. Showing them new stuff like we did today with OOOO. So on the one hand, a lot of people interested in esports and esports betting. So we covered that. OOOO, live video commerce. Most people don't even know it exists. They're now starting to know about it. So let's do it again, my friend. But thanks for joining us today.
No worries. Thanks for having me, George. Appreciate it.
To everybody at home, thanks for joining us. Hope you enjoyed it. Make sure to subscribe to us on YouTube, Spotify, and all your favorite podcast platforms. And we'll see you next time. Hey guys, the video's over, but don't forget to help your company by liking it and even leaving a comment below. And then don't forget to help yourself by subscribing to our YouTube channel so you never miss another great AGORACOM small cap video.